Good morning. Welcome to Trading Hour. I'm Reema Tenduka. With me is Sonia Shenoy. Very, very flat on the benchmark indices. Unchanged from yesterday's level, but the mid-cap index is cracking. Pull up that intraday chart of the mid-cap index. First, there was a sell-off, but then the markets recovered about 900 at about 945. And once again, in the last 15 minutes, the mid-cap index has taken a turn for the worse, down close to about 0.7%. Negative advanced decline ratio to begin trade with. Hi, Sonia.
Hi, Reema. Well, I think it's just one of those days and one of those times, right, when the market is choosing to correct a bit, choosing to take some of its profits. Lots of big, news flow lined up, especially in terms of data from the US as well. So the market perhaps is on tenterhooks, and we have a holiday tomorrow. So while the US markets will be trading, we won't. So maybe people just preferring to take their positions home today. But it's a setback for mining companies. The Supreme Court has allowed the state governments to collect past dues on mining from April 2005 in the form of royalty and tax. Abhimanyu is joining in on the phone line to give us more on that. Abhimanyu, good morning.
Well, good morning. And the morning has not been really good for many mining companies. However, it's a big financial bonanza for mineral-rich states, as the Supreme Court has allowed the retrospective tax levy on center and mining leaseholders. The nine-judge bench of the Apex Court has affirmed the legislative competence of states to levy taxes on minerals and mineral-bearing land, in addition to the royalty which has been imposed by Center. Now, Center had earlier argued that this would be a double whammy on mineral companies. However, the nine-judge bench of the Apex Court has allowed states to collect past dues on royalty and tax on mineral-bearing land from the 1st of April 2005. These past dues are to be paid by Center and mining leaseholders in a staggered manner over the next 12. However, states.
Oops, I think there's some issue with your audio, Abhimanyu. We can't hear you very well. Yes, go ahead. Complete what you were saying.
Well, states have been asked to not charge any penalty or interest on past dues, even as the top court has laid down specific during the retrospective applicability of its ruling, and it has made it amply clear that states can collect past dues on royalty and tax on mineral-bearing land. Nevertheless, it's going to be a big financial setback for several mineral companies, despite the fact that the amount is to be paid in installments over the next 12 years. It remains to be seen how they are going to react and what is going to be the impact on their financials.
Okay, all right. Thanks a lot for that, Abhimanyu. So that's the blow that's coming in there. One stock that definitely gets hit is Tata Steel. As Abhimanyu said, that this will be implied retrospectively. The only saving grace is they could pay it over the next few years, over 12 installments. That starts from April 2026 onwards. To help us out with an analysis, we have Rakesh Arora, founder of GoIndiaStocks.com, who joins us. Hi, Rakesh. Good morning, and thanks a lot for joining in. Well, clearly it's a negative read-through for Tata Steel. What numbers are you factoring in? They had provided a contingent liability of around 17,000 crores odd. Any other company that you're looking at that potentially gets hit?
So, Nigel, according to my knowledge, there are three states who had levied, this kind of cess earlier. One is obviously Odisha, where, Tata Steel mines are. The other is Jharkhand. And the third one is probably Tamil Nadu, because this whole thing, emerged from a case which India Cement had against the government of Tamil Nadu, where Tamil Nadu government had put some cess on limestone mining. So I think all the companies who have mining, assets in these three states are going to be hit quite badly by this retrospective, tax which Supreme Court has allowed. As you rightly said, the saving grace is that they have some, they have to pay it in a staggered manner, so it's not a one-off one payment which can cripple the company at one go, but it's a direct impact there to the NAVs.
All right, Rakesh, as of now, we know that Tata Steel has that pending due. Any other company, NMDC has taken a sharp hit. My guess is that the street assumes that at the center you have a different ruling party and at the state you have a different ruling party. So that could be, that could be the one that could get hit on a prospective basis as well. Your take?
Yeah, so Nigel, the total estimate for this kind of cess which is overdue, some industry analysts have put it at around 2 lakh crore, and in the Supreme Court, one of the Solicitor General had said that for the PSU companies itself, the impact is 60,000 crore. So we are talking about big numbers here. And as I told you that the companies with mining assets in these 3 states would be hit, quite badly. But NMDC, etc., are falling because now other states will come in and put in their own, cess on royalty. So already we are seeing Jharkhand has taken a lead, and other states are now going to put it. So that's going to impact profitability across, mining industry.
Any idea whether this 2 lakh crore estimate, it includes both the principal as well as interest? Because we understand that the interest will be waived off.
I am not very sure about it because these are not my calculations. These were put up in the court by various agencies. So I'm not 100% sure, but I'm hoping that they would not have calculated interest and penalty actually.
Oh, okay. Interesting. What about Rakesh, on a retrospective basis now, we'll have to wait by to see. Tata Steel, we know they already have got that notice, and that's why they've been providing it as a contingent liability. But on a prospective basis, states like Orissa, you have the BJP that's ruling over there as well as at the center. Some part of the street believes that, since it's the same ruling government, there is unlikely to be a tweak on a prospective basis. Do you believe that's the case, or do you believe that some of these states are starved for finances, they'll go ahead and they'll hike rates?
See, I think states are mostly, in short of funds, so most of them would go ahead. But as Jharkhand has put it, it's not very high. They put in like 100 rupee per ton on iron ore, which is not very steep, I would say, but still, a reasonable impact on all the metal companies. So I don't think, there might be some leeway given to PSU companies by some state, but I don't think, every state is going to put it according to, my thought process.
Okay, all right. What about Vedanta? Because they have exposure to various parts of various states as well, and that's taken a sharp knock. Valuation-wise, there is support, but that's taken a hit, which the street is clearly worried over them, but they're more LME linked, right? So if LME prices recover, do you think they'll be able to offset this?
Nigel, they have big exposure in Odisha. So they will also have retrospective tax coming in. And I think that's what the market is factoring in right now.
What about Hindustan Zinc? Is that a stock, a company, Rakesh, according to you, which might be impacted because the stock is corrected?
So Hindustan Zinc, I don't think Rajasthan had a, cess earlier. But it can definitely have it in future. And Hindustan Zinc could also potentially see higher costs going forward.
Okay, all right. What about Coal India, Rakesh? Because, there is going to be this incremental cess that comes in there. It's not only negative for Coal India, but the cost of power as well go up. So that will be counterproductive, right? Will it be levied even on coal?
As I was mentioning that, PSU companies, state governments, etc., can take a lenient view, like what we saw in case of Nalco. They waived off the extra royalty on their bauxite mining. So there's a chance that PSUs might get spared a little bit, but that's just a hope that we have right now. We have to wait and see. I think what the market is missing is probably the cement companies, and especially the one in Tamil Nadu, that can have a big hit. So
then, all right. So that will be India Cement as well as Ramco.
These are the two big players in that area.
So then it will be incrementally negative for Ultratech Cement to try to turn around India Cement.
Nigel, now you are smart enough to calculate that.
That appears to be the prima facie take out there. So Rakesh, just to sum things up, this is negative. The industry estimate is around 2 lakh crore odd. We'll have to wait by to see whether the PSUs get any kind of breathing space and any kind of some kind of breathing space from the government that comes in there. But for the time being, it's a negative. And also keep an eye out on cement companies, namely the ones in Tamil Nadu, which is Ramco as well as India Cements. We appreciate you joining in, Rakesh. Thanks a lot for joining in and giving us your first take. So that's it, guys. The worst dream actually has come through for these metal and mining companies. The global setup is not very, very conducive as of now. And if there's going to be additional cess that comes in from the state governments, well, that's the fear, and that's why all these stocks are lower. But let's see whether or not there is some kind of breathing space that comes in. For the timing, we know that they don't have to pay it immediately. They have to pay it from 2026 over the next 12 years or so.
Just one quick question, Nigel, in case you have the details. You said Tata Steel has already made a provision of 17,000 crore.
Contingent liability. So
contingent liability. So that covers the entire retrospective?
Yes.
Okay.
So they have been increasing that over the last few years. I think FY23 it was around 16,000 crores. Towards the end of FY24, it was close to around 17,000 crores, and the last recorded number was around 17,300. So every year they have been, increasing that number.
It's covered. It's covered. So far, it's covered.
Yeah, this number is covered because they update it every year. So we know that for sure. In fact, I asked Hindalco, and we played that bite earlier today. So I asked him, what if it's done retrospectively? So Mr. Pai said, for us, it doesn't have any impact because we have not served any kind of demand as of now. So that was the comment that came in from Hindalco as well. So that's why the stock initially saw a knee-jerk reaction, and then it's recovered from here on. This is retrospective we're looking at. Prospectively, we'll have to see each and every state government, how much do they levy. I think NMDC is reacting, as I said, because of the difference of, the ruling party in Karnataka as well as in the center. So that's why the street believes that they have a couple of mines out there which could come in on a prospective basis as well.
Okay. In fact, earlier today, we did speak to Satish Pai, who's the managing director at Hindalco, on the same issue, as well as the management of Hindustan Zinc weighed in on this when we spoke to them last week. Listen into what they had to say.
So our first part of the analysis is the retrospective bit. I think on the retrospective bit, because that can only happen if you have been served a demand. So we do not see any exposure on the retrospective bit. On the prospective part, it certainly we will be in the same boat as most of our mining compatriots, because if the state increase their royalties, then that will add to the cost of the mining. And hence, our cost structures will go up and ultimately the consumer will pay. So I hope that the increase in royalties are done in a more thoughtful manner is the only thing I can say.
So first we have to wait for Supreme Court's decision whether it will be retrospective or prospective. As far as we are concerned, we don't have much on any side unless some new taxes or new cess comes up. So our books are clean that way. As far as whether it's a state government or central government, everybody has to ensure that economic activities happen in a very productive manner, and nobody would like to kill the goose that lays the eggs, right? So it's a matter of time. I'm sure every government will judge it in a very, very matured manner. It's not only us, entire mining sector, including government-owned mining companies, will also be affected by any adverse judgment which does not put economic criteria ahead of just tax collection.
Okay, let's slip into a quick break on that note. On the other side of the break, Satish V.N. Gidugu from Medi Assist Healthcare will be joining in to discuss their Q1 performance. Stay tuned. Welcome back. As promised, we have Medi Assist joining us now. Satish V.N. Gidugu, who's the CEO and whole-time director at Medi Assist Healthcare, is with us. Satish, thanks a lot for joining in. So just to talk about your numbers this time, right? Your revenues from contracts in Q1 grew by almost 19%. The healthcare industry has also been, the health insurance industry has been growing quite well, about 25% or so. General insurance is growing at about 15 to 18%. So in that context, would you say that your own growth is a bit suboptimal? And if yes, what is the kind of growth that you would be looking at for the full year for FY25?
Thank you for having me here. Always a pleasure as always. So I think we are fairly in line with the premium growth that are reported. We are very focused on the corporate and the retail segments of the general insurance industry. I think our growths are fairly in line with how the industry is growing. And like I've always maintained, we hope to stay at par or better the industry growth rates on an annualized basis.
So Satish, this quarter, your growth was in line with the industry, not superior.
Yeah, I think we've again, good to see you. We've integrated Raksha. We have improved our overall market share by about 40 basis points within the health insurance industry. and continue to grow group. In fact, we've improved our group retention rates from what used to be 92% last year, Q1 to a 94%. And we've also significantly expanded on retail. So we're comfortable with where we are.
Your total
right now in this.
Your total premium under management has gone up by 22% in the current quarter. Last year, it was a growth of about 30%. So it's a little slower. Any particular reason for that, and what can you guide for the full year?
So I think our guidance will always be that we'll be at par or better than the general insurance industry growth in corporate and retail. You're aware that there is a slowdown in the employment growth numbers across the board. Clearly, there is softness in the new employee additions and new headcount additions across the board. So that's a softness that sort of reflects, our portfolio as well.
Okay. In terms of, I just want to understand what is your strategy as far as acquisitions are concerned. You made 5 acquisitions in the last 8 years. Will that strategy continue? Is there any acquisition that's lined up in FY25? And primarily, what is it that you're looking at in acquisitions?
So we've always said that the acquisitions have always been opportunistic, either to plug a gap in our geographic presence, right, in India, or to accelerate acquisition of contracts. And I think typically we take about 3 to 4 quarters to amalgamate. And we'll continue to be opportunistic on M&A, no specific roadmap. And all of our growth typically is predicated on our organic or the same store growth.
How has the government business done this particular quarter?
I think we continue to be very actively engaged in the government business. We have also won a couple of new schemes, especially in the state of Karnataka, our home state. And as always, we are cautiously optimistic on the government segment. We continue to look for contracts that fit our margin and revenue profiles.
So is there a particular revenue contribution? Because I think the contribution of government has been going up. It's 9.3% in the current quarter. So by the end of this fiscal year, how much do you think it will contribute, and even retail?
Typically, the government has been in the circa 10%, and I think it's just a seasonality of the booking revenues, and I think there's not been a material change. I don't think we are really exactly a quarter-on-quarter business, but on an annualized basis, we've been fairly consistent in our mix of business.
Okay, we'll leave it at that. Thanks a lot for joining in. I appreciate your time here on CNBC-TV18. That's MediAssist Healthcare with their numbers as well as the way forward for the business. Let's step into a quick break. The market is still under a bit of pressure. In fact, we'll just get the Nifty chart up for you in a bit to tell you what the latest is over there. It's not done much today, but it's not recovered either. So very, very quiet, just holding on to 24,100. Let's step into a quick break. When we come back, market technicals with Mitesh, and we'll also discuss their top trading bets. Stay tuned. Welcome back. Let's talk about some stocks that are in focus right now. Hero MotoCorp is actually one of them. The stock is under a bit of pressure on the back of the numbers that came through. So let me just run you through the numbers very quickly. The earnings, the reported numbers were below street estimates. The higher raw material cost is something that impacted the EBITDA as well as the margins. So the reported numbers, right? Revenue growth of 16%, EBITDA growth of 21%. Margins were up 60 basis points at 14.4%. The poll was 14.8%, so the margins were slightly lower than estimated on a reported basis, and the profits were up 36%. But the management in the conference call that happened just a while back stated that the EBITDA margins were largely impacted because of 190 basis points negative hit on margins because of the electric vehicles in Q1. The adjusted EBITDA margins is much higher than the street estimates at 16.2%. What this means is that, that one-time cost, of course, because of EVs, because of the rollout there, has hit the margins this time. But going forward, maybe they may get get back to that trajectory of 15-16% margins, and hence the stock is sort of recovered from the low point of trade right now. If you look at the other commentary, right, the management commentary is positive. They are looking at positive trends across domestic EV and global business. They're optimistic about demand trajectory. Their focus will be to build premium segments on the back of new launches in the past few quarters. And they say that inflationary pressures are now easing and consumer spending power is set to rise. Let's take a quick look at what brokerages are saying. Macquarie says that the margins have disappointed. The operational performance is worse than its peers. But remember, this was before the clarifications came through on the conference call. They say there's a quarter-on-quarter decline for Hero's gross margins in contrast to a lot of two-wheeler peers reporting a 30 to 150 basis points expansion. They maintain an outperform. They have a 12-month target price of 6177. Jefferies has a buy with a target price of 5,650. So let's see which way it goes. I mean, it was still a one-off that hit their margins this time. But going forward, the management is quite optimistic.
The conference call is today at 4 o'clock, so we'll have more color on the way forward from the management. But moving on to Piramal Enterprises that slumped 6% after CLSA and Jefferies have issued bearish calls on the stock. Mamakshi is here with the details. 10% gone now on it.
Well, thanks so much for that. CLSA has downgraded its rating on Piramal Enterprises to underperform. They've also gone ahead and cut their target price to 860 per share. They say that negative credit cost due to lower provisions and one-off gains supported an otherwise weak operational performance. AUM growth was seen at 10%, and this was largely being driven by the retail segment, which was up nearly 43%. However, some segments of the retail book are continuing to see a deteriorating 90-plus DPD trend, and this in turn could put pressure both on growth as well as credit costs going forward. Apart from that, we also have a note coming in from Jefferies. They say that low interest earning assets continue to weigh on the NIMs while OPEX to AUM stays elevated. The company also utilized nearly 260 crores of its overlay provision in the first quarter, and this in turn aided their profit. In the first quarter, the core PAT, however, was below estimates, and that was largely being led by a lower NII growth. They expect earnings recovery to be slow. ROA is expected to be below 1%, and ROE is expected to remain below 4% for FY25 and 26. So overall, given those factors, Jeffrey too, like CLSA, has an underperform rating on this counter. They've got a much lower target price at 805 per share.
Okay, thank you very much for that. Mitesh is now with us for a quick technical check on the markets. Mitesh, morning. Thank you for joining in. Very, very quiet on the frontline indices, but mid-caps are cracking. What have you made of the day so far, and what would your calls be?
Yeah. Good afternoon. So I think that's one worry, that the mid-caps have started to show some signs of weakness, and overall that doesn't point well for the market. But as I said, I think this is a market, which at lower levels with the put option writing is showing some resilience. So let it break below this 24,100 and then, maybe take a short over there. Or alternatively, people can slowly start selling some out of the money call options for the August end expiry. That's one of the way to approach it. On the stock side, I think, we have a mix of buy and sells. I think on the selling side is RBL Bank making a fresh swing low. So keep a stop at about 214 here and look for a target of roughly around 200, maybe even lower levels can be tested. And on the buying side is IT names. Persistent is doing well. So buy here with a stop at about 47.10 for targets of 4,900.
Okay, thanks a lot for that. Let's step into a short break. On the other side, the management of HEG will be joining in to discuss their Q1 numbers and the way forward. Stay tuned. Welcome back. Well, HEG is the stock that we're looking at right now. The company reported a weak set of first quarter numbers with the EBITDA margins coming in at a multi-quarter low of 6.7%. The net profits also slumped 83%. To discuss the Q1 results, we're joined by Executive Director of HEG, Manish Gulati. Manish, thanks for joining in. I just wanted to understand what went wrong this time around. The results were quite weak. The EBITDA margins at a multi-quarter low. Can you share with us what the outlook is going forward? What were the utilization levels and what is the kind of target that you're looking at for FY25?
Good morning. About this quarter, I wanted to mention an exceptional thing, which you can see in the other expenses, that we have some investments and we have done mark to market at fair value. And if you look at the quantum of that, just compare with the last quarter, you can see the figure. So that is an exceptional circumstance. So which is why you can see the EBT is to be down. Otherwise, barring that, our operational performance is similar to that of the last 2 quarters. Our capacity utilizations for the last year were in excess of 80%, and this quarter also they're close to 80, not 80, but close to 80%. And we have expanded already to a 100,000 ton capacity through the year. Although the next 2 quarters, 2-3 quarters seem to be weak. There's weak demand from weak production of steel and weak demand of graphite electrodes. So another 2 quarters are expected to be weak. But about capacity utilization, we still hope that through the year, when we close this year, we should be close to 75%.
You said Q2, Q3 will be weak in terms of volumes, right?
Weak in terms of pricing. See, the pricing continues to be under pressure. There's reduced demand. Of course, that brings pressure on both, actually, the volumes as well as prices. So we will, I think that we will have very similar results, barring that exceptional circumstance which I told you about this quarter. But the next 2 quarters are going to be very similar to this one.
So what is the volume guidance for the full year? Keeping all this in mind?
I would think
75,000 tons.
Yeah, 75,000 tons. That's right. That's the plan.
And can you tell us, you have some expansion plans that are taking place. Post the expansion, what is the kind of cash on your books? And any way to reward shareholders, either through a buyback or anything else, that you're looking at? How would you be using the cash on the books post the expansion?
We have about 825 crore and less loans of about 600 crores. So net cash is about 225 crores or something. And as you can see, we have announced the stock split. So that would definitely benefit the shareholders in the long run by increasing liquidity, discovery of fair price, etc.
Manish, you said that margins were depressed in the current quarter because of this non-recurring increase in the other expenditure. So what would margins go up to, say, in Q2, in the absence of this jump in other income?
Other 2 quarters are going to be very similar because we don't
in terms
see
of margins.
The pricing continues to be under pressure, although we are still trying to sell more and more. And if you compare ourselves with our peer group globally, you'll see HEG still doing the best among all our global peers.
So when you say pricing is under pressure, could you put it in numbers? What are current prices? How would it compare with, say, a year ago? And in Q2 and Q3, do prices fall further or stay at current levels? Give us some numbers.
The numbers are, it's everywhere, anywhere between 5% or something, and it is coming down quarter on quarter. But we are more concerned with the spread because the key raw material, which is almost 35% of our cost, that is also coming down, and there's a time lag between the two. So that is why the electrode prices are coming down, the needle coke prices are coming down, and we are able to maintain that kind of margin for the last 2 quarters. And going forward, at least it's clear that demand will take a while to come back. So you have to bear with us. However, the future of this industry is absolutely bright. We know the new electric arc furnaces which are getting constructed as a big demand on the horizon. We can clearly see, we have data on all the steel plants, who are building plants, US, Europe, in Middle East, everywhere. So the demand is going to come very soon. It's just we are waiting for the time to turn around.
What about exports?
Our exports have always been 2/3 of our production in that range. So whatever, the business increase should happen in exports because India is still more a blast furnace based country, and the new electric arc furnaces are coming in the developed world, predominantly in US, Europe, and some Middle East countries.
Okay, Manish, we'll let you go on that note. Thank you so much for joining us. Appreciate your time here on CNBC TV18. Let's slip into a short break. We'll get you more on the markets on the other side. We'll be joined by Arun Jain, the Chairman and Managing Director of Intellect Design. Stay tuned.
Welcome back. Let's get in another corporate conversation going. Intellect Design is in focus. They reported their numbers a while back, but the recent announcement is that the company has launched Purple Fabric. This is a platform which will aid enterprises or companies for AI adoption, and it's largely catered to the financial services, the financial institutions. Purple Fabric, an AI platform which aids AI adoption by financial institutions. Arun Jain, the chairman and managing director of the company, is now with us to talk about this launch of Purple Fabric and even the Q1 numbers, because we didn't get a chance to chat with him about the quarter gone by and the outlook for the year. Arun, morning. Thank you for joining in. This is Reema here. Let's talk about Purple Fabric. I remember in the recent conference call that you spoke about post Q1 numbers, you spoke about that there has been tremendous lead generation for Purple Fabric. So now the street wants to know about conversion into revenues. So have you signed on any enterprises? Have enterprises adopted Purple Fabric? If yes, how many? Do you have any deal numbers that you could share with us?
I think let me share with you, first of all, for the investor of CNBC, what is the AI business is all about. AI is in the three spaces. First of all, AI is a mystery right now. Everybody is behind AI, but still the deals are not in the offering and the companies are not really showing the growth numbers. Because AI has a three elements. First is your conversational AI, in which like generative AI models can give you, which is 80% right information, and that should be okay for most of the conversational AI. Second is advisory AI, where you give the advice to somebody, but then he applies his own wisdom on the top of it, for which he needs up to 90% accuracy in the AI. And then there's some decision grade AI, which is required for financial institution, where the accuracy up to 97% is required. So these are the three categories, the A1, A2, A3 categories of the AI capabilities. And what Purple Fabric is doing is helping the organizations in a fully governed method from prototype to production in 90 days for the use cases which they are looking at it, which can be imparted over there. So this is a very different level of AI, which we move from advisory AI, that is A2 to A3 journey, can help using Purple Fabric. And I'm in Bangalore launching Purple Fabric in Bangalore, which is the capital of the innovation. And we had a yesterday announcement where almost 50 plus partners came for understanding the capability of Purple Fabric, because most of the SI services company are working, or consulting company working on AI. And now after experiencing the storyboard of Purple Fabric, they are now willing to sign the next step in adopting Purple Fabric for their customers. So that is what we were looking at. For having the AI to be implemented in the customer thing, we need consulting organization, we need global system integrators to take Purple Fabric as a platform which they can apply on generative AI or open AI and Bedrock or Llama models, and then create value for the customer in production and enterprise.
So, Mr. Jain, do you have any projections of how much Purple Fabric can contribute for you once all these enterprises sign on?
Yeah, we are looking for in next 5 years, 4 to 5 year plan is close to $100 million should come from Purple Fabric alone, if not more. There are higher chances to grow this revenue. So this is a platform which is like Palantir. Most of the investors must have known Palantir, which is a cutting edge platform, and which is doing in US. It's a big company over there. Purple Fabric is for financial services, but Palantir is for defense services. That's what I would like to suggest to the investor, to look at Palantir and look at how they are winning the leads. That is the potential we expect it to do with the partners.
Okay, so $100 million of revenues in the next 4 to 5 years is the potential of Purple Fabric, according to you.
That's right.
Okay, let's talk about FY25. Do you think it will contribute this year, or it'll take some time before widespread adoption takes place? Because you have a target of achieving 15% of revenues, X of the GEM contract. And in Q1, revenue growth has fallen short. It's been about 8.8%. So how will you achieve this 15% revenue guidance for the full year?
Yeah, as you all know that Intellect is not a quarterly business, so definitely it's fallen short. We could able to recover above 600 crore revenue on quarterly basis despite of GEM revenue going away. So that's a positive thing that the company has a momentum of 600 crore plus revenue. Logically, we should have done 700 crore this quarter or in next 2 quarters. So our target is to move to 700 crore revenue quarterly target in next 3 to 4 quarters. And that's the journey, which is we are on the track. Some good license deals are there on eMAG.ai. The second thing which we launched is the eMAG.ai, which is a first principle thinking based core banking transformation, which we won the deal last time. Largest Hungarian bank won the deal. So we are in conversation with 3-4 such deals in a marketplace for core banking transformation. This is again a very big space. GTB is a third big space where we are working with the payments and digital corporate digitalization. So today, I think the efforts we put together over the last 7 years is taking shape in all the three verticals. One is GTB verticals, which is payment, digitalization, trade and supply chain finance. Second vertical is core banking, lending, central banking. And third vertical is AI vertical and wealth, AI, wealth and insurance vertical. All the 3 verticals are there. So to achieve 15% growth ex GEM is very much possible.
So in 3 to 4 quarters, you anticipate that your quarterly revenues will go up from the current 600 crore to about 700 crore rupees, aided by all the initiatives you've taken.
Yeah.
What will it do to margins? Because I remember so many previous conversations of ours where you've said that this business is positioned for higher margins, 25, 30%. But currently you are at 20%. When can the company sustainably get to, say 25% at the first step and then 30%?
Yeah. I think as soon as the license revenue will come in, our cost structures, if you look at it, is around 480 crore is my cost structure, all the expenses. So the difference of the expenses, 480 crore, if I go to 650 crore revenue, the number will be achieved. So in our case, it's not a linear margin. Margin growth is a non-linear in nature. So this 480 crore, if it grows marginally quarter on quarter, then overall license growth going to 700 crore, substantial money will come to margin bucket only.
All right, just a very quick answer, sir, on the deal environment right now. In Q1, you were impacted by the delay, a deferral of a 30 crore deal. Again, even in the current quarter, are we seeing some deal deferrals?
As of now, we are bullish, but as of we need to see, because banks are banks, mother. They are running from Australia to South Africa to US and Europe. Many things can change. So we cannot be 100% bullish about it. But looking at the pipeline, we are looking at 15% growth on an annualized basis. Some deal may slip Q2 to Q3, Q1 to Q2. Those is within less in our control. Then the deal which is mature enough, where the contracting takes time.
Sure.
We have such a number of deals where contracting is taking longer than the deal winning, which has been completed.
Mr. Jain, great conversation. Thank you for joining in and wish you all the best for Purple Fabric. We'll get into a break, and here's a quick programming note for all our viewers. Global investor, author, columnist Ruchi Sharma, in his latest book, argues how a more restrained government in India has been generating faster wealth. He also talks about India's stock market performance versus the rest of the world, but highlights a critical flaw in his latest book, What Went Wrong with Capitalism. To know more, tune in to CNBC-TV18 for a freewheeling chat on global markets, Indian economy later this evening at 6 p.m.
Well, GMR Airports and SJVN are in focus today on the back of their Q1 numbers. Vivek is here with all the details. Vivek, over to you.
Well, good morning. That's right. So GMR Airports, it's a very similar story that's played out, especially when you're looking at the company in terms of the operational performance over the past few quarters. What's happening? Operationally, it's strong. The operational profit, that is the EBITDA margins are improving both sequentially as well as on a year-on-year basis. But on the bottom line, due to various forex adjustments and also the interest payment that is due to various FCCB holders, this is something that is actually going ahead and impacting the bottom line, which is why the company is declaring a profit loss or a bottom line loss. So when you're talking about the numbers themselves, first up, the company has taken an enabling provision to go ahead and raise close to 5,000 crore via a QIP issue, and the route that the company has chosen could either be via the QIP route or the FCCB route. Revenues higher by 19% on a year-on-year basis, EBITDA higher by 19.5%, EBITDA margins staying steady despite the higher base at 37.3%. Net loss has come in of over 330 crores. Now, what is the reason for the loss? Number one, the higher finance costs, almost 890 crore versus 576 crore on a year-on-year basis on account of the interest payment due to FCCB holders. Higher depreciation too was something that the company witnessed this time around. And remember, the base quarter actually had a one-time gain of 76.1 crore. Remember, this particular quarter was quite important for the company because the company managed to conclude the merger of GMR Airports with GMR Airport Infrastructure. Now, talking about SJVN, it's a very strong operational performance by the company. Revenues higher by almost 30%, EBITDA higher by 32.5%, margins very strong at 76.7%, and profitability higher by 32%. What aided the top line growth? Number one, the gross power that the company generated, higher by almost 56% on a year-on-year basis and up 3.7 times sequentially. Installed capacity increasing, once again aiding the EBITDA, 14% increase as far as the installed capacity is concerned. And the PLF, the plant load factor that the company enjoyed this time around was very strong at 63% versus 46% on a year-on-year basis. Couple of important developments. Number one development, it will be important to see when the company can go ahead and commission its key facilities. And number two, very important, the company has said that they are looking to dilute stake in the renewable energy platform that they have set up, which is called as SJVN Green Energy. Further developments on that would be key to track from the stock perspective.
Thank you very much for that. And that brings us to a close in trading hour from the entire team. Thank you for watching. Don't go anywhere. Halftime report is up next.